There's a new IPO on the block that's got everyone talking. Fractal Industries. The buzz is getting pretty loud, but what's really going on behind all those exciting numbers? That's what we're here to figure out. Is this a hidden gem waiting to be discovered, or is it just a whole lot of hype? Let's break it all down.
Okay, so the first thing you see, the number that's grabbing all the headlines, is this one. The company's profit has more than tripled. And that's not over a decade, that's in just 1 year. You can see why investors are getting very, very excited. This is the kind of explosive growth that really drives that initial frenzy.
But, whenever you see a number that looks that good, you've got to ask the question, right? Is the story behind it as solid as that growth suggests? Or is there something a little more complicated going on that we need to get our heads around before even thinking about jumping in? That's exactly what we're here to do.
All right, so first up, let's dive into the story that everyone is hearing. This is the initial pitch, the one that's creating all this buzz. Think of this as the simple, straightforward bull case.
So, on the surface, the story is pretty compelling. It's an SME, a small to medium enterprise, and they're looking to raise about 49 crore rupees. The public story is that they're in the industrial components business. Now, what really catches your eye is the promoter holding. It's almost 97%. That screams confidence from the people who own the company. And the money they're raising isn't to pay off some old debt. It's all going straight into working capital to grow the business. It really does look like a solid company that's ready to take off.
And hey, for anyone actually tracking this, you gotta move fast. The IPO opens on February 16th, and it closes just 2 days later. The allotment gets finalized the very next day, and then boom, it's listing on the stock market on February 23rd. This thing is moving quick.
Okay, so that's the hype. An industrial manufacturer growing like crazy. But what if that's not the whole picture? Because when we started to dig into what this company actually does for a living, well, that's when things started to get a little complicated.
In fact, right away, a huge contradiction just pops up. We found two completely different descriptions of what their core business even is. And this is where that simple, shiny story starts to get really, really interesting.
And this slide just perfectly illustrates the confusion. One source describes them as a B2B firm making industrial parts, but another more detailed source calls them a garment manufacturer. So which one is it? Are they making nuts and bolts or are they making t-shirts? It can't really be both, can it?
Well, the data clears it all up. Fractal Industries is, without a doubt, a garment manufacturer. A massive, and I mean massive, 92 to 93% of its revenue comes from making clothes for brands owned by the e-commerce giant Myntra. Another 7 to 8% comes from bulk sales to other online sites. And their own in-house brand? It's less than 1%. So the key takeaway here is huge. Forget industrial components. This is a clothing supplier that is deeply, deeply tied to one single client. Now that we know what they really do, let's circle back to the bull case. Because even with that, let's call it confusion, about their business, there are still some very powerful arguments for this IPO. And maybe the most powerful number on the bull side of the argument is this one, a return on equity of 63%. That is an incredibly high number. Basically, it means for every 100 rupees of shareholder money that's in the company, it's generating 63 rupees in profit. That signals some serious efficiency.
So let's just lay out the bull case one more time. You've got that incredible profit jump from about 2.27 crore to 7.54 crore. You've got the founders with all their skin in the game, keeping that 97% stake. The IPO money is all fuel for the fire purely for expansion, and it's all topped off with that stellar 63% return on equity. You can see why people are excited.
But for every bull, there's a bear, right? And the case against investing in Fractal Industries is just as compelling. It really focuses on some serious risks that are kind of hidden beneath those flashy growth numbers. And the single most alarming number in this whole analysis has to be this one, 88%. That's the percentage of the company's total revenue that comes from just one customer, Myntra. That level of client concentration is, well, it's extremely high. And it is without a doubt the single biggest risk to this entire business.
One of our sources, CA Pradeep Rajput, doesn't pull any punches on this. He says, and I quote, that this is at a danger level. I mean, think about it. When one client holds the key to almost 90% of your business, your company's entire future is pretty much in their hands.
Now this slide shows something that really challenges that smooth profit growth story. Take a look at the revenue. It's a roller coaster. After hitting 89 crores in FY23, it crashed down to 50 crores the very next year. And it's still struggling to even get back to that old high. This shows that while the profits might look great right now, the underlying revenue is actually pretty shaky.
So the bear case is clear, and it's potent. You have that extreme, frankly dangerous client dependency. You've got a volatile revenue history, a high debt-to-equity ratio of 1.76, which means the company is carrying a good bit of debt. And to top it all off, they had negative operating cash flow last year, which is a major red flag for any company's financial health.
So, we've seen the hype, we've uncovered what the business is really all about, and we've laid out two completely opposite arguments. How on earth do we pull this all together for a final verdict?
You know, it really just boils down to a classic investment trade-off. On one side, you have the potential reward, truly explosive profit growth, that incredible efficiency from the high ROE, and founders who are clearly all in. But on the other side, you have the risk. A business that is dangerously dependent on one single client, carries high debt, and has a history of shaky, unpredictable revenue.
And so, that brings us to the final question you really have to ask yourself. When you look at that trade-off, is investing in Fractal Industries a calculated risk with the potential for huge payoff, or is it just a dangerous gamble on a company that has way too many fundamental weaknesses? Ultimately, the answer really depends on how much risk you're willing to take.